You know, there comes a time in every trader's life when he has to look himself straight in the eye and say, "Stop before you blow your account." Because make no mistake, the market has an endless supply of lessons, but your capital doesn't. You can always come back from a bad trade, but it's a hard thing to come back from ruin, and that's what we're talking about today. In the previous video on how to trade consolidation zones, I told you that patience was the trader's secret weapon. Well, this is the flip side of that same coin, restraint. Knowing when to stop, knowing when to sit tight. Now, I've seen it happen more times than I care to count. A trader catches a streak, thinks he's found the rhythm of the market, starts pressing his bets. Then one day he wakes up and finds that same market, his so-called friend, has turned against him. The account's bleeding red, the heart's pounding, and the fingers are itching to make it all back on the next trade. Has that ever happened to you? That feeling of wanting revenge on the market? You see, the market doesn't care about your emotions. It doesn't know you exist. It moves to its own rhythm. And if you start trading out of frustration or fear, you're finished. You've stopped being a speculator and turned into a gambler. And gamblers don't last long. Every blown account I've ever seen started the same way, with one trader who couldn't stop when he should have. The biggest mistake a man can make in this business is to think the market owes him something. It doesn't. The market pays only the man who waits for the right setup, who knows his play, and who protects his stake. The capital is your lifeblood. It's the ammunition that lets you stay in the game. You wouldn't go to war and waste all your bullets in the first hour, would you? Then why do traders empty their accounts chasing noise and emotion? Let me tell you something. The great moves, the kind that build fortunes, they don't come every day. They don't even come every week. The market spends most of its time going sideways, luring the impatient into traps. Remember what we discussed in that earlier session about consolidation zones. That's where the untrained eyes see nothing, but the patient trader sees the coiled spring. The same principle applies here. You don't need to trade all the time. You need to trade right. There were times in my own career when I made a small fortune, only to watch it slip away because I got greedy. I thought I was smarter than the tape. I thought I could force a profit out of the market when it wasn't ready to give one. But the market has a way of humbling every man who tries to outsmart it. The lesson I learned, the hard way, was that it's better to be out of the market wishing you were in, than in the market wishing you were out. Now let me ask you, how many times have you doubled down on a losing position, telling yourself it'll bounce back? How many times have you said, "Just one more trade and I'll be even"? That's the voice that leads men to ruin. The market doesn't care about your average price or your ego. It only cares about what's happening now. And if you can't accept being wrong, if you can't cut a loss quick, you'll never stay solvent long enough to be right. Here's a truth most traders never accept: the best trades are often the ones you don't take. There's wisdom in doing nothing. There's strength in waiting. The amateurs think action equals profit, but the professionals know that patience equals survival. If your setup isn't clean, if the tape isn't confirming your read, then step aside. Keep your powder dry. There will always be another opportunity, but there won't always be another account. A trader's greatest weapon is not his system, nor his indicators, but his self-control. Without discipline, even the best strategy will fail. You can have perfect chart analysis, tight risk management, and still lose if you can't control your impulses. Think about it. What good is recognizing a consolidation zone or spotting a breakout if you can't stop yourself from overtrading before it happens? That's how today's topic ties back to what we covered before. The structure of the market means nothing without the structure of your mind. When the tape turns against you, the only sane move is to step back and wait. Don't argue with it, don't fight it. The tape is never wrong, opinions often are. I used to tell myself, if I can't make money sitting, I'll never make money trading. That was one of the hardest lessons to learn, but it saved me from disaster more times than I can count. Do you know what separates the speculator from the gambler? It's not luck, it's control. The speculator studies, plans, and acts when the odds are in his favor. The gambler jumps in hoping to get lucky. And hope, in trading, is the most expensive emotion of all. You have to strip it out of your system. The only thing you can rely on is your preparation, your timing, and your discipline. Let's talk about that word, discipline. It sounds simple, doesn't it? But it's the hardest part of the job. The discipline to stop trading when you're on tilt. The discipline to walk away after a winning streak, before the market takes back what it just gave. The discipline to risk small when your confidence is shaken. Most men don't fail because they can't trade. They fail because they can't wait. And when you think about building wealth from trading, don't think about making it all in one swing. That's not how real money is made. It's built trade by trade, patiently, like bricks laid over time. Protect your base capital, and it will protect you. Lose it, and the market won't even notice you were there. Your job is to stay in the game long enough for the big moves to come. And they will come, if you have the patience to wait for them. So when you find yourself tempted to force a trade, to push when the tape is dull or choppy, ask yourself, am I trading opportunity, or am I trading boredom? Because boredom has cost traders more money than bad signals ever did. The market doesn't reward impatience, it punishes it. Every trade you take should have a reason, a plan, and a stop. And when that stop is hit, you don't question it. You obey it. The trader who can take a small loss without complaint is the one who stays long enough to take a big win. The man who can't stop, who keeps chasing after the market, is the one who ends up watching his account disappear digit by digit. I've always said, the hardest thing about trading isn't learning charts or strategies. It's learning yourself. The battle is internal. The market only exposes what's already there. Your fear, your greed, your impatience. Once you master those, the market becomes a lot simpler. But until you do, it'll keep teaching you the same lesson over and over. Stop before you blow your account. When in doubt, stop trading and let the market speak. That simple idea has saved more traders than any strategy ever written down. But it's the one rule most people can't follow. Because doubt makes you uneasy, and the human mind hates uncertainty. You want answers, you want direction, and you want it now. But the market doesn't operate on your schedule. It speaks in its own language, in its own time. If you try to force it to tell you something before it's ready, you end up mistaking noise for truth. And that's how accounts get drained, not by big crashes, but by small, impatient guesses made in moments of doubt. Every trader knows that feeling. The chart's not clear, the candles are messy, and your conviction starts to fade. You find yourself clicking between time frames, zooming in, zooming out, trying to find a reason to act. You start thinking, maybe I'm missing something. Or, I can't just sit here doing nothing. That's when trouble begins. Because when you're uncertain, any action feels better than waiting. You convince yourself that doing something is progress. But in trading, uncertainty is not a call to act. It's a signal to pause. The best traders in history understood this. Your job isn't to predict, it's to react when the picture becomes clear. The market always tells the truth, but it doesn't always tell it immediately. It takes time to form direction. It needs to show its hand. And when you're in doubt, that means the hand hasn't been revealed yet. Maybe the volume's low, the price action's choppy, or the news cycle's distorting the tape. Whatever it is, the signs aren't aligned. That's not a weakness. It's information. It's the market's way of saying, stand aside. Watch. When you force trades in those conditions, you're no longer speculating. You're guessing. And guessing is a luxury you can't afford in this business. Doubt is part of trading. It never goes away. Even the best setups come with uncertainty. The difference between a professional and an amateur is that the professional respects his doubt. He listens to it. He lets it keep him out of bad situations. The amateur treats doubt like an enemy, something to be defeated with more analysis or more trades. But in truth, doubt is a guardrail. It tells you when your vision's clouded. It reminds you that there's no shame in sitting out a trade. The cost of missing an opportunity is nothing compared to the cost of trading a bad one. Think back to what we discussed in the previous video on how to trade consolidation zones. Remember how the market compresses, building energy before the breakout. That period of uncertainty, when the range tightens and nothing makes sense, is when doubt creeps in. The impatient traders start guessing the direction. They want to be the first to catch the move. But the disciplined ones wait. They let the market speak first. When it breaks cleanly, with confirmation, they act decisively. The same principle applies to every kind of trading. When you don't know, wait until you do. Ask yourself this: how many of your biggest losses happened when you weren't sure but traded anyway? Most traders, if they're honest, will tell you the same story. They saw a setup that wasn't perfect, hesitated, then convinced themselves to take it anyway. They said, "I'll just try a small position," or "It looks good enough." But good enough is another word for uncertainty, and uncertainty has a price tag. When the market turned against them, they weren't prepared, because deep down, they never believed in the trade to begin with. That's what makes those losses sting twice as much, because they were preventable. When you step back and let the market speak, you give yourself time to think clearly. You start seeing patterns form naturally. You start noticing when the price action aligns with the story on the tape. You get to watch without bias. That distance gives you clarity, but when you jump in during doubt, your perspective narrows. You only see what confirms your bias. That's why traders chase reversals too early or hold losing trades too long. They stop listening to the market and start trying to argue with it. There's something powerful about doing nothing when everyone else is doing something. It takes strength to sit out when the crowd is rushing in. But that's the kind of strength trading demands. The amateurs confuse stillness with inaction, but professionals know that waiting is an active choice. It's controlled observation. It's the difference between reacting to noise and responding to truth. The market doesn't whisper. It roars when it's ready. If you can't hear it clearly, that means it's not your turn yet. I remember times when I'd stare at the tape and feel completely lost. Prices jumping, patterns breaking, the usual rhythm gone. The younger version of me would have tried to outthink it, to find a reason to stay in the game, but experience taught me that confusion itself is a signal. If the market feels unclear, it's because the big players haven't made their move yet. They're waiting, positioning quietly, letting the small traders exhaust themselves. When that happens, the best move you can make is to step aside and protect your capital until the storm passes. Doubt also plays tricks on your psychology. It makes you question not just the market, but yourself. You start second, guessing your strategy, your system, your instincts. You tweak settings, jump between indicators, abandon your plan. That's dangerous, because it's not the system that's broken. It's your confidence that's shaken, and confidence doesn't return through action. It returns through clarity. The only way to get that clarity is to pause, breathe, and let the market define its next move. When you stop trading during doubt, you're not being passive. You're preserving your ammunition. Every trade costs you mental capital as well as financial capital. If you keep firing shots in foggy conditions, you'll have nothing left when the real target appears. That's why the pros trade less and watch more. They understand that capital preservation is a form of progress. Every dollar you don't lose today is a dollar that can work for you tomorrow. The undisciplined trader can't see that. He measures progress only in action, not in restraint. Letting the market speak also teaches humility. It reminds you that no one, no analyst, no algorithm, no trader, ever truly controls the outcome. You can read signals, but you can't dictate direction. Your job is to listen, interpret, and respond. The market is the teacher, not the student. And when you're filled with doubt, that's the time to close your mouth and open your eyes. Watch the volume, the structure, the rhythm of price movement. Let the truth emerge from the tape instead of trying to carve it out of chaos. The traders who survive the longest are the ones who understand that missing trades isn't failure. The failure is refusing to wait for clarity. The market gives you moments of opportunity, and they stand out clearly when they come. They don't require force or guessing, they reveal themselves. But you'll only recognize them if you've trained yourself to pause during confusion. When in doubt, step back, protect your capital, and let the tape show you its story. A missed trade is cheaper than a forced trade. I learned that lesson long before I ever made a fortune in the market, and I paid for it with time, not money, which in this business is the best kind of tuition you can get. You see, every trader wants action. They sit in front of their screens, the tape moving, the candles forming, and they start feeling that itch. The urge to click the button, to be part of the move. But here's the truth. The market doesn't care about your boredom. It doesn't owe you a trade. The market will give you signals when it's ready, not when you are restless. So when you force a trade just to be in, you're gambling, not trading. And gambling, sooner or later, costs you everything. The temptation to trade for the sake of trading is one of the oldest traps on Wall Street. It's the silent killer of accounts, and it doesn't strike like a crash. It drains you slowly, trade by trade, as you keep trying to make something happen that isn't there. You look at a chart, convince yourself there's a setup forming, and enter half prepared. You justify it by saying, "I'll manage the risk," or "I just need a little movement." But deep down, you know it's not your setup. You know the tape isn't clean. You know the volume's not right. So why take it? Because patience feels uncomfortable. Because you think doing nothing means you're missing out. But you're not missing out. You're saving yourself from a bad trade. Think about it. A missed trade costs you nothing but an opportunity. A forced trade costs you real capital, real emotion, and real confidence. You lose once on the chart, and then you lose again in your head. And once your head's gone, the rest follows. Most traders don't blow their accounts because they don't know what to do. They blow them because they can't stand doing nothing. The real skill in speculation is waiting for the market to show its hand, waiting for confirmation, waiting for the odds to be in your favor. Every minute you spend out of the market waiting for a clean setup is an investment in your survival. In the previous video on how to trade consolidation zones, I told you that the best moves come after periods of stillness, after the market has coiled up, resting, waiting to break. The same principle applies here. The right trade reveals itself naturally when you've been patient enough to let the noise settle. You don't force it, you recognize it. The consolidation taught you to sit on your hands while others guessed the direction. That same discipline saves you from forcing trades in a choppy, uncertain market. When the tape is messy, you don't need to participate. You need to observe. You can't train the market to give you setups on your schedule. You can only train yourself to wait until it does. That's what separates the professional from the amateur. The amateur feels the need to do something. The professional feels the need to protect something. His capital, his edge, his mindset. Every time you take a trade outside your system, you dull your edge. You teach your brain that rules can be bent. And once you start bending rules, you stop trading and start reacting. The market will punish that every single time. I used to sit in the old bucket shops, watching the tape click across the wall, and I'd feel the same urge. I'd think, the market's moving, I should be in. But the moment I gave in to that thought, I paid for it. I learned that the hardest job of a trader isn't finding trades, it's rejecting bad ones. Most men can't do that. They see a small move and jump in, afraid to miss it. They don't realize that missing a trade never killed a trader, but forcing one has ruined plenty. The tape doesn't care if you're on board. It will move with or without you. The question is, will you still have your capital when the next real move comes? Ask yourself, how many times have you taken a trade just because you hadn't traded in a while? How many times have you watched a clean setup come and gone, and then chased it late, thinking you were missing out? Every trader's done it. The pain of missing a move feels sharp in the moment, but the pain of losing on a bad entry lasts far longer. You can recover from missing a profit. You can't easily recover from losing discipline. The difference between good and great traders isn't the number of trades they take. It's the number of trades they don't. If the market is quiet, that's not a problem. It's information. It's telling you that the odds aren't clear, that the big money isn't moving yet. Your job is to wait for the footprints of the big players, not to guess where they'll step next. Forced trades usually happen in low volume, uncertain environments. The price moves a little. You think you see something, and before you know it, you're trapped in a whipsaw. The pros aren't trading those conditions. They're waiting for you to make that mistake so they can fade your move. There's another cost to forcing trades. One most traders don't notice right away. It drains your focus. Every unnecessary trade burns mental capital. It eats into the energy you should be saving for real opportunities. So when that perfect setup finally comes, you're too distracted or too beaten down to take it confidently. That's how the market wins twice. First by taking your money on the bad trade, and second by stealing your courage when it counts. Trading isn't a contest of who trades most. It's a contest of who trades best. The market doesn't pay you for activity. It pays you for accuracy. And accuracy comes from patience. Every tick you resist chasing, every fake breakout you sit out, every dull session you watch quietly. You're building the muscle of discipline. The missed trades are the tuition you pay for mastery. They're proof that you're learning what most traders never do. That silence is part of the process. So when you see the market move and you feel that rush in your gut, that sudden urgency to be in, pause. Ask yourself, is this my trade, or just my boredom talking? Because boredom is expensive. It tricks you into believing the market owes you an opportunity when it doesn't. Remember this, a forced trade is like a leak in your boat. One may not sink you, but over time, the water adds up. The only way to stay afloat in this business is to trade less, wait longer, and act only when the market shows you its hand. Emotional trading is the fastest route to ruin. I've said that line to more traders than I can count, and every one of them nodded in agreement, until the market tested them. Because it's one thing to know you shouldn't trade on emotion, and another to actually keep your head when your money is on the line. The market is a master at pulling those strings. It knows exactly how to make you doubt your plan, chase your losses, and throw logic out the window. But once emotion takes the wheel, reason gets left behind, and your account usually follows. You see, the market is built to provoke you. Every tick on that chart carries weight when you have money in the game. When the candles flash red, fear kicks in. When they flash green, greed takes over. And both emotions whisper the same lie. You have to do something right now. That's how traders end up pressing buttons they shouldn't, entering too early, exiting too late, or doubling down on bad trades. They forget that doing nothing is a position. The calm trader wins because he acts when the odds are right, not when his feelings are loud. I remember in my early days, I'd sit there watching the ticker tape roll, heart pounding, palms sweating, every move feeling personal. When I won, I felt like a genius. When I lost, I felt like a fool. That kind of thinking is poison. The market doesn't reward ego, it rewards discipline. Emotional traders live and die by every tick, but the professional knows that no single trade defines him. He's not married to any position. If the tape turns against him, he doesn't argue. He acts. He takes the loss and moves on. No explanations needed. Now, think about your own trades. How many times have you exited a position too soon because you were scared of giving back profits? Or held on to a losing one because you couldn't stand to admit you were wrong? That's emotion talking. The charts don't change because you're afraid or hopeful. The market doesn't care how badly you want to be right. It only reacts to order, flow, and pressure. When you let your emotions dictate your trades, you're fighting the market with feelings instead of facts. And that's a fight you'll never win. Fear and greed are the twin thieves of every trading account. Fear keeps you from taking good trades, greed keeps you in bad ones. Together, they turn a rational trader into a reckless one. Fear whispers, what if you lose? Greed whispers, what if you make more? The professional ignores both voices and listens only to the tape. He has a plan before he ever enters a trade. Entry, stop, target. He follows it. no matter what he feels in the moment. Because the moment you start making decisions based on emotion, you've already lost control. In the previous video on how to trade consolidation zones, I mentioned how the market tests your patience before it rewards it. The same principle applies here. Emotional trading usually begins in those quiet zones, when the market isn't moving, and your mind starts inventing reasons to act. You mistake boredom for opportunity. Then the market moves slightly, and emotion floods in. You chase a breakout that isn't real, or you panic out of a range that was perfectly normal. The same patience that kept you safe in those consolidation zones is what protects you here. The less emotion you bring to the tape, the clearer the picture becomes. The great traders aren't made by their wins, they're defined by how they handle their losses. Anyone can stay calm when things are going right. But when the market turns, when the stop gets hit, when the streak ends, that's when a trader's true nature shows. Most can't handle it. They take it personally. They start seeing patterns that aren't there, forcing trades to win back what they lost. They forget that every trade is just one in a series, one small part of a much bigger story. The trader who survives is the one who can lose without losing his head. That's the irony of this game. The less emotional you are, the more money you make. Because when you're calm, you can see clearly. You can wait for confirmation. You can read the tape without bias. But when you're emotional, the chart becomes a mirror reflecting your fears. You see what you want to see, not what's actually there. That's how you end up chasing green candles or holding red ones, thinking the market owes you a turn. It never does. It only responds to pressure, not passion. Ask yourself right now, do you trade what the market shows you or what you feel it should do? Most traders don't realize they're emotionally attached to their opinions. They'll defend a bad position just because admitting they were wrong hurts more than taking a small loss. But that pain, that discomfort, is part of the job. The quicker you learn to accept it, the longer you'll last in this business. The market rewards objectivity. The emotional trader might get lucky for a while, but luck has an expiration date. Discipline doesn't. One of the best ways to fight emotional trading is through structure. You need rules that protect you from yourself. Before you enter any trade, know your entry, know your stop, and know your target. Then obey them. Don't move your stop just because you feel like the market might turn. Don't add to a losing position hoping it will bounce. If your setup isn't there, walk away. The only way to stay consistent is to take emotion out of the equation and let your plan guide you. The plan is your anchor when the waves get rough. There's also a simple truth that most traders ignore. Your mindset outside the market affects your mindset inside it. If you're trading tired, stressed, or desperate, emotion will find its way into your decisions. You can't separate your state of mind from your execution. That's why trading isn't just about reading charts, it's about reading yourself. Before you ever open a position, you have to check your emotional temperature. Are you calm? Are you patient? Are you focused on process instead of profit? Because if you're not, the market will expose it. Emotional trading often starts small. A little revenge trade here, a little hesitation there. You justify it by saying you'll get back in control later. But later never comes. Each emotional decision feeds the next until your account is half gone and your confidence is gone with it. The trader's downfall doesn't come from one big mistake. It comes from 1,000 small ones made under emotional pressure. And the worst part, you don't even see it happening until it's too late. If you want to survive in this business, you have to become a student of your own emotions. Learn how fear feels in your body. Learn how greed sounds in your mind. Because once you can recognize them, you can catch them before they act for you. The market's not the real enemy here. It's your reaction to it. Every successful trader learns to control that reaction, to keep his mind steady no matter what the tape says. Only then can he see the truth in front of him. Discipline is the trader's first line of defense. Without it, every other part of your trading, your strategy, your analysis, your instincts, means nothing. I've seen brilliant analysts go broke and average traders grow rich, and the difference between them wasn't intelligence. It was discipline. The market doesn't care how smart you are. It doesn't care about your opinions or predictions. It only cares about how you act when the tape moves against you, when your emotions flare, when every part of you wants to break your own rules. That's when discipline either saves you or destroys you. Discipline in trading isn't about perfection. It's about consistency. It's doing the right thing again and again, even when it's boring, even when it feels unnecessary. It's cutting losses without hesitation, waiting for confirmation before you enter, and sitting on your hands when the setup isn't there. It's not glamorous work. It's not exciting. But it's what keeps your account alive long enough for opportunity to arrive. The man who trades with discipline will outlast the one who trades with emotion every single time. Because in the end, survival is the real edge. When I started out, I thought trading was about finding secret information or the perfect system. I spent years chasing indicators, studying patterns, looking for some magic formula. But the longer I stayed in the market, the clearer it became. There is no secret.